This is Kenzo Extra Hot Forex. It's Thursday, so let's go straight to NASDAQ 100, US30 and gold. If maybe you're still not aware that we also analyze gold here, now you know I also analyze gold on this daily analysis. So as I said, I will start with NASDAQ 100 and I'll go to US30, then I'll just end up with gold. So if you're not subscribed, please don't forget to hit the subscribe button. It helps the channel to grow and it helps the YouTube algorithm to find other traders who are just looking for videos like this. Maybe it might help them. So if you want to contact me, check my description, you will find my contact. So let's jump straight to NASDAQ 100. So what happened? So actually what happened yesterday is the market was around these levels, then we had this push up, you see that. But before that, you can see that the market was going in a very nice uptrend until we have a breakout, then you see the sell-off. So this area now, it's a very nice support that we're going to use. I hope you can see that. So here we can still have a sell-off momentum. Maybe if we don't have that, it means the NASDAQ can break this area. It's not really a strong resistance, but it seems to be an area where the market bounce around. You see, even here the market is not breaking this area very quickly. It means we might see a small sell-off before the market push up. So let's try to draw some nice lines there. You see this area. I'm not going to force this area to make sense with my previous areas, but you can see this around here. The market was around this here. You see the market never reached this area, only one candle, but you can see that the market was just respecting that. So it's a zone, but this one it's lower, so it means I'm going to take this one out. I'm just going to draw a very new line from here. So I'm not going to look much on my left, so we're going to focus on this here. Why? Because it's also a 4-hour time frame. It means we have like 1 2 3 4 5 6 candlesticks running around that area. It means it makes sense, so we can just do something like this. You see, so we are here at the moment, so the market is pushing up. So let's mark these zones. This is our high. It's our higher high, obviously. So we have another area here. Remember, we are on a 4-hour time frame. You can mark also this one. So what we do, we push to a bit smaller time frame and see exactly what happens around those zones that we have just drawn. You can see, okay, you see that there is this rejection. Let me just remove that first. But if you can see that is very clearly. So around this zone, we can say we can mark this area. Then if the market reject from this, we can call it a very nice resistance. If the market reject, even if the market doesn't touch these areas, as long as the market reject around this area, so it's fine. We're going to call this a resistance. Then it means the third time we're going to wait for the market to break until it goes up. But it's possible that the market can just still push up because it's not like a very strong resistance. You see, even here we can't call it a very strong resistance. It's just that it's our higher high. So it doesn't mean that if you have a point like this, it means that the market will reject there. You see, so what we're gonna do now, we're going to just put a temporary resistance line there. If the market breaks here, it means this actually is not really a resistance. then we can just expect the market to push up, you see. But if it bounces there around here, then it means this is our resistance. Now we can wait for a breakout before we go up, or the market can just go lower, maybe come around this zone again, then maybe we can see another bullish momentum. So yesterday, yes, we did kill the market around these zones. If maybe you were in free Telegram, maybe you saw that. If you don't, just go on my description to be in that free Telegram, or if maybe you have any questions. So here we can just push lower to a bit smaller time frame and see what we can get from there. I think this area, it seems to be a resistance at the moment. You can see how many rejections that we get there, that we got. You can see we have so many rejections, so we can call it a temporary like resistance. If the market can push lower, obviously we're waiting for the market to break it before we can call it another buy. But the market is going higher again. Obviously I can't say it's overbought, but since we have this sell-off, so the market is just trying to recover everything, you see. So let me push to a bit smaller and see maybe if we can get something. Let me see, for us maybe to confirm that sell. I'm not saying that I'm going to take a sell, I'm just saying for me to confirm that the market is going to go down, we have to break this area, then push lower. Why? You can see this temporary support. You can see it was never broken since this. Let me check. I think since yesterday the market was just respecting this area here. Then if we push this area, if we break this area and retest and push lower, it means we can expect the market to reach this zone, the zone that we were, this zone, yesterday's zone, where I just call it a support. So it means the market can do that. So if not, it means the market, you can see this is a wedge, it means the market can push up here, then we can call it another nice buy, you see. So on NASDAQ 100, I think maybe you saw what it's going on. You can combine that maybe with your analysis, your strategy, whatever, then maybe they can give you some nice strategy or analysis. So let's push to US30. On US30, we also had similar movements. They were all bullish, but I think now I see a very small, let's see, let me remove this, let me start from this. So for those who don't know how I draw these things, I make these things look easy. I already practiced this, guys. If you need those books, please WhatsApp me or Telegram me. I will send those books to you for free, guys. It's just free stuff. So just because they're free, it's not like they're not powerful. They are powerful. So I do stuff like that. You see, let me just use like proper. You can see it's 1, it's 2, and it's 3. So I'm trying to connect those points, you see. So what I do is I do something like this, so they make sense to me. You see that? So which to me I think is quite easy. So if you see that, you can just practice that. Next time when you see these points is where you will see something like this. You see that? They now make sense. So even on US30, I'm still seeing the same thing, similar stuff that I saw on NASDAQ. It means we can have another sell-off before the market push up. You see that? So if that doesn't happen, it's nothing wrong. There's nothing wrong. So let's just go and try to draw something here. If we can get, you can see that this zone is like the market, it's rejecting around this zone. So let me start from here. Let me push, you see. Okay, it seems like the market is creating something like this. That's why I like double lines. Maybe you can see a bigger picture from that, because we have like wicks there, so they must not confuse you. So let me do them like this. Yeah, you see that. So the market rejected from this area, also here and here and here. So I hope you can see exactly what's happening, you see. So you can see, let me just point those ones. 1, 2, 3, 4. You see. So that's why I say you can call this a resistant. This one is much better than the one that we saw on NASDAQ. So it means we expect the market maybe to pull a bit lower, maybe until we can call it a buy. But if we have a breakout here, it means we can wait for that retest and push up. Remember, when you wait for retest, it doesn't mean that the market will always bounce back before it goes up. Sometimes the market can just shoot higher without even retesting, you see. So let's say if you want to sell from this area, what will you do? Or you going to do something like this. You can go to a bit smaller time frame. My network is very slow. Let's see. Let me draw something here. Something like this. You see, you can draw. It's just that I've zoomed because it's a smaller time frame. You can do something like that. You can see that this area is where the market was just respecting. You can even push lower. I don't know if we push it lower it will make sense. I don't think it makes sense. So something like this, obviously you can see that the market was just respecting this zone. So sorry, if the market breaks here, you can expect maybe a small retest, then you can say maybe you want to sell. But at the moment we can say we'll wait for that rejection, I mean breakout. Sometimes I repeat this, sometimes you can't get those retests. The market will just shoot lower, you see. So unfortunately, if you want to be in a safe trade, you have to wait for those ones. So sometimes it's good to miss trades. You can't be in every trade, guys. So if you miss any trade, it's still fine. We trade daily, so since we are day traders or retail traders, it means we're going to lose some opportunities and we will find some opportunities again. So now we are on gold. On gold, we can still start from any time frame, as long as it shows us a very nice setup, then we can take it. So here again, because maybe some people they don't know how to analyze gold, it's similar to, I think it's also similar to trading currencies, just that it's just fast, it's very volatile. So expect something like that. So you can see what I did there. So let me do it smoothly. It's 1, 2, 3, 4. If I try to connect, you'll see if I connect these dots, they will make sense, you see. So let me just do a very perfect stuff for you. You can see I will start from here. I'm just doing this quick because I don't want to make this video very long, guys. But the thing is, I'm trying to help you to see the bigger picture, because maybe some of you never traded gold before. You see that? So let's see. Here it's on an hour. So an hour time frame on gold, sometimes it seems to be bigger because the market is very volatile. So what we do here, we can also have another inner trend line which can be like this. So that's why even today we took a buy around this area and we made small profit and we were out. So let's go to a bit smaller time frame. I want to show you something. You can see what I was trying to tell you here. So the market was the market, you can see, bounce around this, was bouncing around these areas, let me show you with arrows. Let me make them red. 1, 2, around the support that I've drawn, and here. That's why we took a buy around this level and we made small profit. So the market is here, but I think maybe it's trying to break this support, but the market can still push higher, you see. So when you trade gold, expect these rejections. It means your stop loss shouldn't be very close, but you should also use a very proper risk management. Here, the proper risk management, I'm talking about the lot size. Don't just add a bigger lot size, which is because it's going to affect your account when you are in a drawdown, you see. So now I think that gold is trying to push up because we are on this resistance or a support now. But when we go back to, let's see if we go back to an hour and see what we can expect from this area. So it seems like I want to show you something, just because you have that, you must have that picture in your mind so that you don't really lose on simple stuff. You can see the market is pushing up, down, up, I can't call it that, down, let's say down and up. So here the market is still trying to go up. You can see we never reached this zone or this area, so we expect the market to play around before it pushes up. So why do I say that? This area is similar to this area. You can see that the market went up. When it comes down, because it never but here at least it reached my resistance, but here the market is trying to push up again. Or even here the market came down, but again here pushed up. Even here, because we are on an uptrend, the market can still push up again. It doesn't mean that we have to be on this on this support every now and then. Sorry guys if I say resistance on support or support on resistance. To me, those things, they're still the same thing, because it's where the market will bounce around. So that's why sometimes when you trade gold, you should be on a bit smaller time frame, maybe 15 minutes. I like 15 minutes. Some they even go to 5 minutes, but sometimes 5 minutes I think is very small. So you can see, even if maybe we try to draw something like this, maybe support like this, you see that this zone, let me add another one. It really makes sense. Why? Because we also have this support here. It means the market can still push up, but it seems like the market is also playing around this one. But since we are on an uptrend, we can break this area and push up, you see. So the best thing to trade gold sometimes is to take those short-term trade, where when you are in profit, you just get out, because the market will just bounce back again, now time and again. So it means you can take several trades if the market comes back around that area. So if you are not subscribed guys, please hit that subscribe button. Don't forget to share with your friends, people who want to learn about Forex, so that way maybe we can grow the channel. Thank you for watching. This is Kenzo, Extra Hot Forex. Bow.